Okay, let's get started. Hope everyone's doing all right. Hope your morning, afternoon, or evening is going well. So welcome to our co-AMA between Exponent and Credmark. Today our speakers will be Exa, who's the Chief Technical Fox from Exponent, and we've got Collier here from Credmark, who leads up BD and partnership for them. So this AMA, we're gonna keep it sort of freeform, but we'll keep it within the hour. So it's going to be structured in four parts. First, we'll ask Exponent some questions we've received. Then it'll be questions for Credmark, and then it'll be questions to both parties. After that, we'll take any questions we have from the audience. So without further ado, let's get started. We'll begin with Exponent. So Exa, a question we got was, what's the story behind Exponent and why did you decide to build a capital as a service protocol?
Yep. Thanks for the intro, Hector. And I don't know how much time we have for this call. So if I'm taking too long on going on a question, just feel free to cut me off or tell me to speed up as needed. But as for Exponent and the story behind it, so we got our started in 2021. At first, we actually had a relationship with a crypto fund at the time, and we were investigating ways to allow hedge fund or crypto funds to plug into DeFi, so building services, tools, and systems to enable that onboarding into the DeFi ecosystem. And so, but what we realized was that that was way too early, and that they were not ready, and the market wasn't ready for that. So we were looking for, what are the things that are in the treasury and asset management ecosystem, things that are an immediate need. And what we actually found out after we did the raise, going through forming a team, shortly after that, after we decided to pivot, was when we, after our raise, having USDC in a multi-sig. And every single projects that we talk to or have met have after, let's say it's 2.5, 3 million, $5 million raised, all of those assets, all of those capital are sitting idly. And then we are seeing DAO governance being formed. People are trying to make attempts to manage those assets. And then everyone, including us, came into the same sets of problems, which is how do we effectively deploy these assets? How do we effectively manage capital in a way that would make this productive? Either make it productive or even keeping up with the purchasing power, right, of your assets. And there wasn't a clear answer to that. So either you are giving away your agency to a person to manage, giving you all your hard-earned raise into a hot wallet, or you're doing all of that on a multi-sig. You're doing all of that via governance forums, and that is a painful process. And so that's when we decided, okay, there are really real needs here for treasury deployments. And fast forward to now, we decided to pivot into doing capital as a service. How I described what Exponent is doing is that we are building DeFi products for Web3 native teams. So we help organizations mitigate the risk, reducing the time and the cost required for these entities to effectively deploy treasury capital, and doing so right in a trustless and most secure manner. And our goal, broadly speaking, is how do we enable treasury coordination at scale? So yeah, that's a little bit of the background behind it and just the reasoning behind working on capital as a service.
Yep. So that actually leads in very well to our next question in that how does Exponent actually improve the investing or the capital management experience for DAOs? So maybe you can walk us through a bit how the product's going to work.
Yeah, can do. So compared to, I think we can start first with how DAOs are currently making investments or deploying assets to where we think the development and the ecosystem should go to and what we offer. So primarily what's happening now is, if you're sitting on treasury and you want to make this active, you will give this to a person. So if it's on a multi-sig, you sign all those transactions, putting all these assets to a guy with a hot wallet and MetaMask going across different chains, different networks, and different protocols. But most importantly, you need a full-time person. This doesn't work. Like, you can be managing treasury as a part-time job, for example, but that gives away the agency, right? That gives away the access to those assets. And then, of course, the alternative to that, the very extreme, is we decide everything by consensus. We will say, hey, look, we will deploy this amount to this protocol at this time. And then, doing also through, if you're a larger organization, you might be doing that through a governance forum. Each investment decision might take like 2 or 3 weeks for that to get signed. Or if you're smaller teams, then it still exists, which is like, let's do that on Gnosis State, right? Let's get 3 out of 5, 3 out of 6 signatures across all these different time zones, across all these different devices for every single transactions that you do in DeFi, of which there are many if you are actively managing those assets. And so in our ideal world, the investment experience or capital allocation decisions should be for these organizations to decide what the parameters are, what their goals and risk tolerance and objectives are, and then having that as a mandate that could be encoded on chain in a format, and then allowing a delegate or an external entity or small subgroups or sub-teams to take those mandates and then run with it, but running within those sets of boundaries. And that's exactly like what we want to offer, like that experience where they can go from their treasury save to deploying assets to deciding, okay, here are the strategies that they're willing to be going with. And then Exponent team would be able to automate the whole process, automate the deployment, whether it's rebalancing, harvesting, and they could always be sure that capital works for them, right? They could always, as an admin rights, can withdraw those assets back into their main treasury.
Yep. Okay. Don't really want to toot our own horn, but seems pretty interesting in what we're building, and looks like a really exciting design space. Speaking of what you've just mentioned, when do you think we can expect the first product?
Yeah, I can talk a little bit about what we're doing for the first product. So the first product will be called Phoenix Dash, and we are doing a Web3 native version of what in TradFi equivalent would be a corporate savings account. So we turn the idled stablecoin within these treasuries sitting in Gnosis Safe in particular, and vault that is managed, automated within the guardrails set by smart contracts across different DeFi products. So we'll come up with strategies internally. You could think of us as basically a treasury managers or a treasury guild that have this particular sets of products that we automate for teams. So we'll work with you through, okay, what are your risks in return? This is the type of expectation in their return profile. And then we'll deploy, do all the heavy lifting in the infrastructure side, deploy these smart contracts, and give them a full-on user interface for them to plug in the Gnosis Safe and put assets into this particular vault. And behind the scenes, those will push out. Let's say it will be a push update. So we will decide, okay, we'll take in this certain type of strategies that will deal with convex, curve, etc. These particular assets only. And then after the administrator or the team have to sign off on it, then we can go in and do the work. We'll automate the process. We'll do deposit, withdrawal, rebalances. We'll have our own internal risk dashboard that our strategists would be able to use as they come up with new strategies, monitoring active strategies. And let's say in an event of where there is a risk is above a certain threshold that our strategies anticipate would be too risky for a product or a strategy, then the biggest value prop here is that we can trigger a transaction to risk off. And that would be equivalent of unwinding a trade. So let's say if you're taking not this particular product, but just to help people see the picture better. If you are taking a borrowing against your collateral positions, if meets a certain utilization ratio, then we can either pay back the loan or do a complete like withdrawal of the collateral, right? And rebalances out of that into stablecoin. So that's just the broad scope of, on the product side, what we are trying to offer, and just in general how everything works behind the scene.
So, would it be fair to say that we're automating a lot of investment or capital allocation functions? If that's like a one-liner.
Yes, most certainly so. But doing so within what is expected within DeFi, right? I think it's important to us to uphold the ethos of this ecosystem and the value that everyone has. We don't want to be just become yet another hedge fund equivalent. We don't want to be like that. We've seen like people like, let's say like Layer Zero or Stargate, like after the race they do exact same thing. They put all the assets into for Jump to manage, right? But that's taking custody risk. That's taking full management position, and in ecosystem and an environment where everyone values trustlessness and transparency. Doing all of this in DeFi and not trustlessly and not putting custody risk in our hands, that's part of the biggest value proposition. And this is why you must see me as a Fox profile picture, not a smart contracts. We want our risk strategies, we want our dashboards, we want our really things that we push out the door to be doing the work for us, just so that they can trust in the code, in the product, and not on a fund manager, for example.
Yep. So we're in the spirit of decentralization, I guess. I think that's where this next question is coming from. Do you have any plans to launch a retail vault?
Retail vault, we do. I think the most important thing for us right now is getting existing sets of strategies working. So most important thing for us is dogfooding our product. So put our race that we've conducted, that we're sitting on, to deploy in against our own product, against our own strategies, and see how well that does. And we're in the process of working with DeFi treasuries, working with projects, startups that just did a raise and have a particular need for this product. So that will be done first. Once we get our platform, our product to a certain size or a certain stage of our roadmap, then eventually we will also open up our strategies to be deployed against assets and retail users. So this could be anyone with a hot wallet, anyone with a cold wallet could deposit their assets into a vault. Not necessarily have to be a team or somebody coming in from a Gnosis safe. But yeah, that's a little bit further away, but that's for sure within our purview.
All right, and then last question. I guess no crypto AMA would be a crypto AMA without this question, but could you talk about the token and also what the utility of XPN is going to be?
Yeah, sure. Then I mean, I'll give like the AMA answers as well, which is the utility is itself a work in progress. We know that we want this to be like the vision for Exponent is to become a community owned platform, community developed, co-developed, doing everything in public. And so we will have XPN being a central coordination tool, a shelling point of sort for teams, sub-teams, and the ecosystem to support our vision, right, of scaling the treasury coordination for teams and for everyone in this space. So that as an end goal working backward, yes, we'll have governance token. We'll have liquidity incentive to some form to incentivize the usage of the products on our platform. The actual use cases for that, actual design space for that is pretty massive. So we're actively working on how this will be shaped up. But then, I think in order to reach our goal, it has to be compliant with whether, how do we use tokenomics to enhance the safety of these deposits? How do we use tokenomics to drive participations of people to become a strategist, or to help build a more secure ecosystem and strategies and products within this larger DAO? So the short answer is more details and utility soon.
Okay. Thank you for that. So that's it for the exponent specific questions. Next, we'll move on to Credmark. Collier, are you there?
Yeah, sure am.
Yeah, how are you doing today?
I am doing well.
All right, that's great to hear. So let's start. Why don't you tell our audience a bit about Credmark and what you guys are trying to do?
Yeah, sure will. And I just want to invite anybody from the audience, if you want any clarification or anything, feel free to jump in on this. So Credmark was born out of a previous project, a previous iteration, and that project, which was the same founders and everything, was trying to produce a credit score, an on-chain credit score. And the sort of realization was that the tools to do that, the tools to effectively collate the data to manage risk in crypto and DeFi specifically, just were not there yet. So what our team set out to do was build the foundational infrastructure to be able to do really effective and robust risk management in DeFi. And even going beyond that, we wanted to make a platform that folks could build on. So this wasn't just a tool for us to use and go build another project, but really our goal is to kind of be the source for modeling in DeFi and financial analysis and risk analysis in DeFi. Um, and so the way we're approaching that is True Blue DeFi. We are a protocol. Basically, what we have is a modeling framework. So that's somewhere you could go in and model, and that model framework can be any of the outputs can be consumed via API along with our raw. Right now, we're just on Ethereum, our raw Ethereum ETL. And so that's set up in a way that we've got really, really robust and super rapid prototyping and deployment of models that can immediately be consumed via API. And all of that is wrapped in a marketplace. So we are getting towards a very decentralized world where somebody like Exponent could come to Credmark, the protocol, and say, hey, we've got this need for risk management, and then our community of model developers would go in and create whatever Exponent needs, and they could then consume that via API.
All right, cool. That actually leads us very well to the next question. So one of our community members asked, what gaps does the Credmark platform fill when juxtaposed to, say, Dune Analytics, Dap Radar, or DeFi Llama?
Yeah, that's a good question. I think Dune Analytics is definitely similar in that they're community driven as well. So what they're missing is they're not as composable of a platform as we are. So with Credmark, you can actually build on top of other people's models. And so we think that that's going to generate a really positive snowball effect in terms of quality. So we also will have verifiable models. So everything is super open source, can be verified by the community, and we're also working on actually producing verified models. So models that have been through a validation process, so that you have kind of total confidence in the data you're consuming and using, in you guys' case, to manage your clients' money. So the community driven aspect makes us very different than like a DApp or a DeFi Llama, as well as the marketplace aspect. So you can buy and sell your models on our protocol. And lastly, I would say we're a Python driven modeling framework, and that is we think really beneficial because that is the programming language of choice for data scientists, academics looking at models. It's very finance friendly, and the goal there was to attract folks from even outside of DeFi today, so that you get the best and brightest across the globe that are coming in and working on models.
All right. So next question is, why should investors and institutions trust that you're making the right decision in terms of these projects models?
Yeah, that's a really good question. And I touched a little bit on sort of some of the validation process, but today we want to make sure from jump that we're providing really quality work. So we've staffed up our core team with traditional finance professionals. All these guys know crypto, they understand crypto, but basically they are bringing a level of quality into DeFi that in risk management really isn't there. I mean, you talk to most people and they'll say risk management is a key thing to solve in DeFi for it to be able to continue to grow. So what we see this, our we call it a risk and research team, is doing is injecting a level of quality, transparency, and really even base tools that don't exist in DeFi today into DeFi, so that you can start to use things that, you know, a bank, a hedge fund, any of these sort of traditional folks are using to measure risk. And these guys aren't just lifting and shifting sort of existing risk management. They're actually in the sort of inventive stage of, all right, we know TradFi tools aren't going to apply one-to-one to DeFi. So how do we modify them or create new tools that are really can accurately measure risk in DeFi and help folks make really good decisions in DeFi. So that's one piece that they're working on, and I'd encourage everybody to check out our risk library. We're actually making all of their research public, so that you know, any model developer coming in or somebody working on a totally different project can use this sort of knowledge base to improve the work that they're doing in DeFi. Now, as we move forward and as we kind of move out of beta and continue to grow our user base, we are really want to leverage our community to validate models, to iterate models. That's really the benefit of composability. DeFi, as we all know, moves really, really fast. So we think if we have the best and brightest across the globe looking at these models, that they're going to evolve and continue to be accurate, basically. This is all very open source, all very public. We encourage people to challenge the stuff that's on our platform, because those sorts of challenges are the types of things that are going to make sure that we maintain the level of quality that we're starting out with.
Okay. Last question specific to you guys. So what you guys released your token already, CMK, right? We got a question about what the utility of CMK is.
Yeah, that's a good question. This is DeFi after all. So it's pretty standard DeFi stuff. You have to use our token to access our data for our models. So you'd pick it up and stake our CMK in order to get access to our protocol. Similarly, you're going to use stake some CMK to be able to model. So if you're a model developer, you'll come in and stake a nominal amount of CMK. And the idea there is that we're preventing Sybil attacks, just kind of maintaining the integrity and safety of the platform. And lastly, CMK is how we pay out rewards to our model developers. So if a model developer comes in, creates a model that, say, Exponent is using, Exponent has staked CMK, and they're effectively being charged for the use of the model. What they're being charged then goes back to the model developers. That is their reward. That is their incentive for creating models.
All right. Thanks for that. That's all for the Credmark specific questions. Now let's move on to questions that we'd love an answer from both of you. So the first one is, what can we expect from the synergy between Credmark and Exponent? Not sure who wants to take it first.
Yeah, I can go in first.
Okay.
Yeah, I can take point on this. So I think from the I think me answering the AMA and Collier here answering the questions from the AMA, I think it's listener probably could imagine this, especially like the product person or technologist could probably imagine this as an entire like solution stack already, which is basically what's happening. And so on, broadly speaking, from Exponent side, we're seeing Web3 development, like where it differs from Web2 is how the stack operates. So when in the Web2 stack, you have this like faceless, nameless, you have these transactions between service to service, you pay per transactions, you pay per resources. But what we're starting to see in this ecosystem is this idea around like cooperatives, this idea around DAO to DAO relationships or project to project relationships, where you can build Web3 solutions that are composable, wrap on each other, that interacts with different parts of different protocols inside the ecosystem. So right from the get-go, I think we at Exponent have this value in mind. So when we were looking at building the whole treasury solutions, we're actually looking, we've searched at like all the platforms that like you've already mentioned already. And then need that certain level of customizability, a certain level of ways for us to push updates or changes or features that, if we do this as like in the Web2 world where we're like, hey, can you implement this feature for us? It's not really not going to cut it. So the fact that like we can, build or contribute models onto Credmark or discussing with, the data analyst or the modelist or researchers on Credmark's end is something that's valuable to us, right? Otherwise, with Exponent, we'll have to do the exact same thing, reinventing the wheel over and over, staffing everyone with like a team of analysts, staffing everyone with a team of data modelers in order to like get to the point where we can effectively understood the risk within the DeFi ecosystem, and then not to mention building an entire platform, an entire infrastructure around managing these assets. And so, yeah, I think for me, the synergy is very much natural coming in from Exponent as an end user, right? We need high quality data. We need a way to push out models. We need a way to ingest these models into our systems, and then actively use that as a means to interact with the broader DeFi ecosystem. Collier, would love to hear your take on this as well.
Yeah, I couldn't have put it better myself there. So I guess from the Credmark standpoint, we've got data infrastructure, we've got risk expertise, and our goal is to enable Exponent and our other partners to be able to build on top of us. We want to add a sort of core building block to DeFi so that Exponent can, instead of building out a bunch of infrastructure themselves or having to go through a Web2 service provider, they can hop into our protocol and just start building. And I'd say even more than that, especially speaking of the composability aspect of our platform, I hope that we are able to speed up the iteration of product for Exponent and be able to provide a really good, durable service that keeps up with the markets, that is providing really kind of top-notch risk models that Exponent can then productize and put out and provide a really great service to the rest of the folks in DeFi.
All right. That's awesome, guys. Next one, putting it out there just to see what your vision is. But the question is, what is your ultimate vision for your project? Maybe this time we could start with Collier.
Yeah, so ultimate vision for our project is a totally decentralized financial modeling platform. So we talk a lot about, success for us is shutting down our email accounts and walking away. This is a really a community driven project. So that means that we have a really healthy tokenomics marketplace, so that folks are properly incentivized to meet the needs of the market, and that is essentially infinite scalability. If we have the incentivization correct, anybody across the globe can come to Credmark. We want to be the guys for financial modeling and data infrastructure. And we want to be sort of that layer underneath that nobody on maybe the consumer facing side sees, but we want to be the engine that helps drive the next generation of Web3 projects. So that means we are super scalable, secure. People trust us. We're producing our protocol, our community are producing the models that the market needs, and we're adjusting and changing every day as the market changes.
All right, thanks for that. Exa, what's your ultimate vision for Exponent?
Yeah. For me with Exponent, it's still revolving around what I mentioned earlier, which is it's a question of how do we enable treasury coordination at scale for Web3 native organizations. So I think if we really carved out, if we look at traditional finance or maybe if we start off from the perspective of like a concept of a DAO, what it means to self-organize, what it means for individuals to put the assets together, self-organize around either a mandate, a mission, a particular goal of these self-organized communities. There's always going to be a need to use these assets to allocate assets that are in a way orthogonal to its missions. So jumping into traditional finance, you see with emergence of the company, then you have a specialization within different sets of companies. So a company could be better or be financial. It could be entities like banks. It could be nonprofit. It could be focused on a certain product or certain types of markets. And I think eventually as DAOs, as Web3 communities evolved, it would get to the point of specialization where you just do one thing really well, and you take this benefit of composability, you take this benefit of being able to reducing transaction costs by working with other DAOs, by working with other organizations. And for maybe for data modeling, it could be the Credmark community. For different types of like lending markets, it could be one of like the lending markets out there. It could be Fuse, could be Aave. But I think for when teams are beginning to form, if they're keeping the assets in an account, it will probably be Gnosis safe. But for treasury products, for DeFi products that serve the needs for teams, serve the needs for not just one person, but community of people, it's going to be Exponent. So I'm imagining us as this layer of the stack where when people self-organize and putting assets together, whether as a startup, a product team, a nonprofit, when they have this like escape velocity of like certain amount of capital where it's no longer feasible for them to manage within their own little teams, or having need to split up into sub teams, that one of the sub teams will be a vehicle, will be a product that is automated, that is managed and taken care of by Exponent. So I see Exponent as running across the entire stack on decentralized autonomous organizations.
All right, thanks for that. Next question we have, this is for both. What are some similar projects in the market today in terms of scalability, security features, or adaptability? Exa, you want to take this one first?
Sure. I think closer to Exponent, it's a tough question. I think for I guess the alternative, like in the product terminology, it's like there is a competitor, but there's also alternative. I think there are more alternatives than there are direct competitions. And so right now, nothing stops a team to putting together a team and then forming a fund around their own treasury, which we see people do. Eventually, you're gonna hit a bottleneck of some sort. You're gonna hit either like products or service bottlenecks or software engineering overheads that has to be surpassed, or you could give it to a person, right? Like from what I mentioned earlier, and then choose from this like myriads of DeFi protocols, like which numbers are growing every single day, and then deciding on what is the best risk tolerance, what is the best protocols to go into, doing all this DD, doing all this analysis, processing through all this data by themselves. So I think although like maybe if you get to the size of Aave, you will have an entire sub team that works on that. But for all 99% of organizations, you will not get to that size. You leverage a product, you leverage a certain service, of which that will be offered by Exponent.
All right. I guess a follow-on to that would be what do you see as one of Exponent's main strengths or a competitive advantage they may have?
Yeah, I would consider strength as you see products that try to cater for all types of users. So if you do a DeFi protocols, you want to make it as open. Well, open is not the wrong word, but you allow any types of client, any type of usage on your DeFi products. We're taking a sort of different approach here. I think we are going to focus and zone in on either types of treasury, types of teams that we work with, and then particular workflow around treasury ops, right? This is not something that it's unless you have this problem yourself, you would not be able to understand it enough to develop a coherent product around this particular sets of problems. So maybe eventually once we go beyond a Fennec stash, it could be other sets of products that are highly focused on a certain type of treasury needs, whether that is not just dollars, but native tokens. It could be ETH. It could be different DAO tools that we integrate with that enable this sets of features. So yeah, I'd say our strength is more so on the focus and the product and the market that we're trying to target.
All right, sounds good. Collier, over to you. What do you see as a similar project in the market today for Trademark?
Yeah, I touched on this a little bit in talking about the differences between some of the other protocols out there, but
Yep.
the comparisons we get the most often are probably Dune, the Graph, and Gauntlet. So we're similar and different to all of those projects in different ways. So in terms of Dune, we're community driven. In terms of folks coming in and producing models and that sort of thing. The Graph, is similar in that regard as well. Now, Gauntlet has the risk focus there. I'd say what sets us apart from those projects is, for one, we're incredibly transparent. So everything is open source with Credmark, which the metaphor I like to use is we're letting in sort of the sunshine and the fresh air and the rain, and that tends to have a really positive effect on the quality of everything we're doing. So we invite our community to not only contribute, but also help validate everything we're doing. So if somebody makes a mistake, there's a high likelihood somebody in our community will catch it, and that'll just continue to grow with or strengthen rather as our community grows. And then, when you talk about Gauntlet, they're one of the only big risk players in DeFi right now, but they're also extremely gated. A lot of their stuff that they have up is not sort of public or open source. They are doing kind of for contract basis. They're not truly, in my opinion, at any rate, a Web3 business. So they are acting like a Web2 business, applying that to Web3. And we are really a DeFi native company. I don't know. Does that answer the question?
Yeah, I think it definitely does.
I actually want to jump into this one and help out, drill down on this aspect for Credmark as well, because obviously from and I think from our perspective, like those three, Collier, that you mentioned, like we look at all of them, and what you mentioned is more or less correct, and I agree with you. On Dune especially, like, it's the question is who uses Dune, and how do they use it. And so majority of Dune, the biggest products of course is the dashboard, right? So having the whole UI already built, everyone's writing SQL queries to be able to fetch data on chain. But then, for us, like, we can't use Dune because we will have sets of systems that will have to ingest data, not only just to view them, but to interact with, or to, based on certain condition, trigger functions, or have a more complex workflow, right? That Dune dashboards are, being a dashboard play, cannot cater for our use case, and the fact that we probably don't want to be, writing like really long SQL queries for the rest of eternity. So that's probably one. Gauntlet part is also another interesting one because I can say right now that Gauntlet, as well as like the contribution model or the flywheel model that something like Credmark would offer, because if of DeFi products are growing exponentially, for Gauntlet to serve all those data and metric in like a B2B sort of manner, you have to grow your entire data modelers and teams in the exact same way. And so unless you turn that into a self-serve products in some way, that someone like Exponent could come in, make contribution, make adjustments, see what's wrong with it. So for, let's say, for Exponent, even like today, I was in the Credmark Discord and asking questions, or like, hey, pointing out certain issues, or pointing out things that could have been improved, and collaboratively work on the actual models with the Credmark team. So something like
Hello? I think we lost Exa for a bit.
I'll jump in. I think he did a really good job. I mean, you guys are actually using it. So you guys, in some ways, know better than I do. But yeah, I mean, it goes to the heart of what we're trying to build, which is we are a DAO trying to service DAOs, and that's how we started. That's kind of where we're going with our project, and I think that sort of collaborative community aspect, where everybody's supporting everybody else, is probably one of our biggest advantages.
Yeah, totally. I think Exa's connecting back in. Let's give him a moment. But in the meantime, we can move on to the next question. This one's relatively straightforward. Have your contracts been audited, and if you could share, by whom?
Yeah, so our first round of contracts were audited by Zokio about 6 or 8 months back. I don't know if anybody is working on a project, but there is a long line to get contracts audited these days. So we've got more contracts that need to be audited. We're working with a kind of big, actually kind of traditional firm right now, just to try and get our audit through. So we've got more audit sort of on the horizon. We're still working on finding the right folks to do it. It's interesting. Like, kind of a lot of the auditors are actually in Ukraine, which for obvious reasons is pretty tough right now.
Yeah.
And I don't know. I think on the state of audit, you absolutely have to have them. We also spend a lot of time. So I'm not technical. I shouldn't say we. Neil, our founders and CEO, and some of our other engineering teams spends a lot of time just with kind of other projects that are we're close to, we're friends with. We like to get anybody that we can to look at our contracts. Just that security aspect is absolutely paramount to us.
Yeah, no, definitely. But it's very true when you say there's a long line of projects that need to get audited. Like, I personally don't think we have enough auditors going around right now. Like, our contracts actually took a while to get audited too. So on Exponent's side, our vault contracts were audited by QuantStamp back in August. And then recently we just got our audit done by Solidity Finance for like our token, our staking, and our airdrop contracts. And Exa's back. Exa, can you hear us?
Yes. Sorry again. I think my app has crashed. What did I miss?
Yeah, that's all right. So we actually just answered the last question. Have our contracts been audited? But we do have some questions from the audience. So I'm gonna move on to that, and then we'll try to wrap up within 10 minutes. So the first one is for Credmark. How many data scientists or engineers are you working with at the moment? And what kind of roles are you seeking in terms of data development?
Ooh, good question. I'm trying to count off the top of my head. The question was data scientists and developers, or just data scientists?
Data scientists and data engineers.
Data scientists and data engineers. So we have one guy that's sort of managing our data pipeline. So that's more making sure that we've got our sort of data ETL up and running, and making sure that it's sort of fit to be modeled with. And then we have between 4 and 6 kind of model developers. No, it's probably closer to 8, actually, now that I think of it. That are sort of part of our core team. And a lot of what they're doing right now is we're working on making sure that we have models in our framework kind of available to be used. The idea is that is sort of bootstrapping our platform. Now, in terms of what we look for, we anybody that wants to join our community and model, either create models for us. We are running workshops so folks can get familiar with our framework. That's kind of what we're looking for the most right now. Folks that can join our initial cohort of model developers and start even developing things for folks like Exponent or our other partners or some of our internal sort of initiatives that we're doing, kind of getting a coherent series of models up. So for example, you could have a generalized model framework to look at under collateralized lending, something like that. I would say if you want to get involved, join our Discord. So you can get there from our website. It's just credmark.com. Should be pretty clear. You can also ping me directly on Twitter or Discord, and I can point you in the right direction. Yeah, we're so even though our full protocol isn't live, we've got pieces of it up. We are pretty good about rewarding folks that contribute with CMK.
All right, thank you for that. Next question is actually for you, Exa. Could you elaborate further on what your vision is for the Exponent DAO?
Yeah, for the DAO itself, this there's different elements, right? I think I'll piece out like one by one. I think the biggest thing is how we plan to scale the Exponent DAO itself. So it's sort of similar idea to how Credmark thinks about model development. We think the same way about strategies. We think the same way about how we look and evaluate all the DeFi protocols. Because if number of networks, number of protocols, number of types of products could be offered would scale exponentially, then if that's the case, this is not something that if Exponent was just to keep staffing the entire core team, you would not be able to cater or provide enough value for this ecosystem than if we were to bring on or scale out the number of contributions that we can.
Ooh, I think we lost him again. Yeah, but ideally, I'll take it from here while X tries to reconnect. But I think ideally we just want to decentralize all the functions that goes into how Exponent would operate. So in terms of like coming up with strategies, we'll try to decentralize that, offer the community a chance to develop strategies, offer contributors to help develop automations for these strategies and all these different functions like rebalancing, harvesting yields, and all that. Yeah, so I guess that's in a nutshell for us. We just have 2 questions left. Next one is for both of us. It's whether we run a bug bounty program or not. So Collier, maybe you can answer that first.
Yeah, we don't have a formal bug bounty program up and running. Likely we'll have one in the future. But like I said, if you find a bug, throw it to us, especially if it's a big one. We are pretty good about rewarding folks that provide some value from a community basis to our protocol. So
yep.
Hop in, fork our model framework. Yeah, let us know what you find.
Yeah, that's awesome. So on our side, we do have a bug bounty program running in collaboration with Immunify. So if you do find a bug, you can submit it through their portal and also let us know on our Discord channel. So last question for both of us. Who would you say is the ideal customer for your project?
I'll take that one first.
Yep.
So really, who the initial customers we're going to go after are DAOs. So we are a DAO. We want to service DAOs. We think that before we do anything, probably one of the best things we can do is make sure that we're established as a building block in DeFi. We want folks to be using us. We want to get that feedback. We want to make sure that we are growing with the sort of global community of DAOs that are out there.
Yep. Exa, the question is, who is the ideal customer for your project?
Yeah, I'll answer the previous one before my client Twitter client crashes again. So yeah, just the final piece on Exponent DAO. We want to be able to not just in the traditional like hedge fund, you have to go to school, you have to go do master's degree, you have to climb this corporate ladder to get into to be able to manage like treasury assets. We want to lower that barrier to entry, so any average Joe, kids out of college, kids in college, people that have the ability can actually contribute to or provide value and capture the value from getting involved into a product that we're trying to offer, or even propose different types of products of their own that you don't have to be 10 or 15 years in TradFi before you can contribute the exact same thing in a different environment. And yeah, so for ideal customers, Yeah, to begin with, definitely teams, projects that have just recently raised will be interested to chatting with you, not just to talk about our product, but also talk about your general like treasury needs, see where we can provide value. Yeah, always in general, not even specific to Exponent. Love to talk to more DeFi teams, NFT teams, people working on DAOs or thinking about ways to onboard into DAOs. Would love to talk to you guys. And DAO contributors as well, I should say.
All right. Thank you very much for that. And that actually wraps up our AMA for today. Thank you everyone for joining and listening in, and special thanks to Exa and Collier for being our speakers for today's AMA. Yep. So
Thank you all for
Thank you,
listening,
guys.
and thanks for organizing.
Yep, no worries. It was a fun one. It was a fun one.
It was great. If my Twitter client can work better, this would be even more fun. Appreciate it, guys, and I really appreciate Collie for joining us today.
Yep.
Yeah,
Thank you
it's
very
my
much,
pleasure.
guy. Yeah. Okay. We'll be ending the space right now, actually.
Right on time. Thank you, everyone.
Thanks a lot, guys.
Take care.
Bye.
Have a good one.